Where are we in this China rally now? You think we're nearing an end, or you think it could actually keep running?
Look, I mean, Yvonne, we think the rally can sustain for a bit. I mean, look, I think the moves have been pretty strong, as you know. I mean, from the bottom of April 16, I think MSCI China or HSCI is already up 14-15%. But if you go back since the Jan lows, we have seen more than 30% rally in the market. But we think it can sustain because, if you look at valuation positioning, that is still kind of pretty low. I think even with the 30% plus rally, valuations for MSCI China are still at 10 times forward, right? Which is still one of the most inexpensive market in the region. I think from all the positioning data we are tracking, it still seems that both hedge funds and the long onlys, the positioning is at 5-year lows, despite kind of the buying in the last few months. So I think those metrics still look pretty supportive. I was in US and Europe last couple of weeks seeing investors, and I would say there is still very strong interest from people in the recent weeks to increase allocations to China now. In fact, I think we are picking quite a bit of interest in upside ideas in China, both in terms of ETFs and upside call options. So this is sort of encouraging because it's different from some of the prior rallies we have seen in China, which were kind of much more driven by short covering. But this time around, it seems we have sort of genuine investor demand, both from long onlys as well as hedge funds. So we think the momentum could sustain.
I mean, a perfect segue, Sunil. Talk to us about alpha opportunities this deep into maybe a rally, and where you think the money should be flowing into at this point, Sunil.
Yeah, look, I think in general, we do see pretty much across the region, we are sort of seeing China obviously is seeing inflows in the last few weeks. I mean, if you actually look at the hedge fund data, it's been 3-4 months in a row where China is being net bought by hedge funds. But as I said, allocations are still low. So I think money is moving clearly into China. If you look broadly across the region, some of the North Asian markets are also doing pretty well. I think there is obviously the broader value up program going on in Japan, going on in Korea. So I think those markets are also doing pretty well. Hang Seng obviously doing strong as well. So I would say I think it's and India on the margin has been a bit softer and some allocations going out of that. But I think broadly speaking, I would say most of the North Asian markets, Korea, Japan, Taiwan as well, including China, that's where money is kind of flowing in at the moment. What we are also noticing is that if you look outside of the Asia, many of the China-centric markets or sensitive markets are actually doing pretty well in terms of flows and performance. You're seeing that in Aussie dollar, you're seeing that in Brazil, Chile, and some of the commodity heavy markets as well. So I would say those are the pockets where money is moving.
How are you looking at the earnings picture? Because we get kind of mixed reviews of how, less bad or, I mean, I'm just wondering in terms of downgrades, what are you looking at right now in this China equity market? And if we're still not seeing the fundamentals improve meaningfully, can this rally still continue?
I mean, that's a great question, Ivan. I would say, look, I mean, to some extent, part of the rally was obviously driven by entire kind of policy easing around the 9 majors, but there was a bit of fundamentals to it as well. I mean, especially if you sort of looked at the 1Q data in terms of macro expectations, they were pretty strong. I mean, both we and Street actually raised our numbers in terms of the 1Q GDP expectations, right? The fourth quarter reporting season, which was undergoing until sort of last couple of weeks, they actually came in better than expected. The full year calendar 2023 earnings came in around 9% year on year, so which was sort of certainly better than what the market was anticipating. So I think both in terms of the macro numbers, in terms of GDP, but also I think the fourth quarter reporting season was strong. I think the early data from the first quarter reporting season we have seen is around sort of 30-40% in. And I would say the numbers have been a tad weaker, around sort of 2 to 3% down year on year. But at least what we are seeing is that there are select sectors where things are starting to see some upgrades. I think consumer tech, internet would be one pocket where at least the numbers are starting to get upgrade. I think it's still we need still more evidence, but our sense is that if you see the first quarter numbers also holding up better, that could give some legs to the rally in terms of fundamentals improving. As you said, still the market is seeing in aggregate downgrades. So the year-to-date MSCI China has seen around 3% earnings cuts, but selectively there are pockets, as I said, which are starting to see upgrades. I think consumer and internet are the two pockets I would point to.